Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, Federal Reserve within striking distance of inflation goal, says top official. As well as that, US launches fresh strikes on Houthi targets as Red Sea trade disruption spreads. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around until you see that. Before we get straight into it, make sure to subscribe. The first article to talk about, of course, is on the Federal Reserve, with the Fed official Christopher Waller saying that the Fed is in striking distance of its 2% inflation goal. And this came with a stern caution as well that the Fed should take its time in cutting rates. Now, this is important, of course, to stay on top of because of how important the Fed is to, looking to see where the dollar or US indices or gold may go. Of course, the Fed runs the US's monetary policy and as a result, has that commanding lead over the way the US economy will move, with the recent increases in interest rates having a great effect on the US economy as a whole. And we've seen these increases in interest rates across the world, or at least across most advanced economies coming out of COVID and the inflation which ensued from that. We've seen those increased interest rates implemented by those top central banks, such as the ECB, Bank of England, and the Fed, of course. But ultimately, we've been talking more so about rate cuts most recently. Obviously, we've been seeing inflation come down progressively and quite consistently now for a few months, and this has created certain expectations and perceptions within the markets by traders, by investors, that basically rate cuts are coming very, very soon. And this has especially been the case for both the ECB and the Federal Reserve, which we're talking about right now. And this is largely as a result of the US's inflation coming down far below what economists originally expected, and as a result presented an overwhelming lack of price pressures, not kind of expected by anyone. Ultimately, though, the Fed has responded to this data, basically saying, we're waiting for more data, we're waiting for more proof of where price pressures actually are within the economy. We're following core inflation, not the nominal inflation figure, which of course takes into account things like food and energy prices, and therefore is more volatile. So the Fed try and avoid keeping their eyes on that, and they more so look at the core inflation rate, which of course doesn't include that kind of data. But ultimately, the core inflation's been coming down as well. But a contrast to this, of course, was last week's inflation figure, which did come in higher than expectations and also showed an increase in inflation in comparison to what we did see in the previous month. And this kind of caused some hesitance by traders, which initially expected rate cuts as early as March, as well as rate cuts as early as March for the ECB, Bank of England a bit later on. But the Fed is expected to kind of cut rates at the moment, beginning in March. But once again, we have a top Fed official here kind of calming the waters in relation to these expectations. So it's of course so important to kind of stay on top of this kind of stuff and keep our eyes on what these top Fed officials are saying, as they will go on to shape US monetary policy. Now, Waller went on to say that recent economic and jobs data showed that the Fed's efforts to lower inflation was working and presenting results. He made an important comment on job openings, saying they declined to a point where a further downturn in the labour market could trigger a steep rise in unemployment. And this obviously shows, a lack of kind of price pressures within the job market, of course, and therefore kind of presents, a very deflationary picture for the future of the US economy and a more dovish picture as a whole. Now, he continued on a cautionary kind of tale against hasty reductions in interest rates, however. And this cautionary tone reinforces expectations that a rate cut in March is unlikely. And of course, these expectations of cuts in March being unlikely obviously followed that recent economic data, that inflation data that I did speak about, which did come in over expectations and presented a gain in inflation. This is despite the move. This is despite the more dovish tone from the Fed recently, which led many to presume rate cuts by the Fed would begin in March. And this is what we spoke about at the start. But Fed officials have repeatedly pushed back against such expectations. Waller went on to signal that expectations of 6 rate cuts in 2024 was far too aggressive. Despite that, markets have priced in a rate cut in March with a probability of 70%. So, markets are still pricing in rate cuts beginning in March. That's important to stay on top of. Whilst we are, kind of hearing some hawkish rhetoric in relation to, we can't cut rates too hastily from these top Fed officials, ultimately the markets are still pricing in those rate cuts beginning in March. So keep your eyes on that most definitely. Now, the stock market's reaction to Waller's comments was limited, with the S&P 500, of course, trading down 0.3% on the day. Waller also claimed nerves over the last week's inflation data, which came in at 3.4%, with Waller commenting on how revisions would show how this data, this figure, overstated price pressures. So, it's kind of a mix of dovish and hawkish tones, of course. It does seem that he's kind of presenting a more dovish picture when it comes to, talking about inflation data, as we spoke about at the end there, with him kind of saying that kind of figure doesn't actually accurately represent the price pressures that we're seeing, as well as him also kind of presenting a more hawkish picture in that him kind of talking about how rate cuts beginning in March are basically unlikely. So this is very important to stay on top of. Keep your eyes on any news in relation to the Fed. Big news, of course, that will be coming out as we do kind of enter this rate cutting era. So keep your eyes on that. Next article to talk about, though, of course, is the US. Now, the US forces yesterday once again struck Houthi targets in Yemen. This follows the Houthis' continued attacks against commercial vessels in the Red Sea. Now, we've been following this, throughout this kind of skirmish, I guess, between the US and the Houthis. And of course, this did kind of arise out of, the more internal conflict within Israel between Israel and Hamas within the Gaza Strip. And of course, the Houthis are justifying their, kind of attacks on commercial vessels and civilians by, calling for an end to Israelis' attack into Gaza. And that's kind of the statement that the Houthis are trying to make. Of course, the Houthis are a militant group backed by Iran, a Shia militant group backed by Iran, which of course have been embedded in the Yemeni civil war since 2014. So they've been fighting, they've become battle hardened, and ultimately they've dealt with a Saudi-led coalition airstrikes before. And so, some have already been questioning the successful or the likelihood of these airstrikes actually achieving success. But we do know that the US has achieved success in taking out key military infrastructure and Houthi targets. So that's important to stay on top of as well. But as we do keep our eyes on topics such as this, it will be greatly affecting the way that US foreign policy is formed as we do also go into the election year. As well as that, ultimately, it will be interesting to see how this does affect global trade. It has dramatically, of course, dropped trade through the Red Sea and Gulf of Aden, which was an extremely popular route used by shipping companies to move goods from Asia or even the Middle East to, of course, Europe. So, keep your eyes on this topic, of course. Now, these strikes by the US took out 4 anti-ship missiles with the Houthis, which the Houthis had prepared to launch. These strikes against the Houthis with a third round so far by American forces. The Houthis, however, did then succeed a few hours later in striking a Maltese vessel. On Monday, the Houthis also struck a bulk carrier in the Gulf of Aden with a missile. These strikes by the Houthis have forced many commercial vessels to avoid the Red Sea and instead travel around the Cape of Good Hope, adding to shipping times, of course. Now, automotive groups have been affected greatly by the delays to shipping, therefore lacking supplies of manufactured goods or semi-finished components has weighed on production. And this is, undoubtedly something that we're going to start seeing across industries as these shipping times do start to affect, production and also kind of, the selling of these goods. So definitely keep your eyes on that, as that will also be affecting inflation, as we've commented on before. Now, Volvo Cars yesterday reported that it had halted production at its factory in Belgium following shipping disruption, and this came with there being a delay in the delivery of gearboxes. Now, the diverted route by shipping companies threatens delays and extra costs for industries including food, manufacturing and metals. The Houthis, however, have showed no signs of slowing down, continuing to promise action against the US. And this adds to kind of worries already of there being a regional escalation to the Israel-Hamas war, and therefore pull in a greater number of states and actors, which of course will have a great detriment to the region and the economies of these nations and the US economy even as a whole. So keep your eyes on this topic, very important indeed. Next to talk about though is the charts, where we do have quite a bit happening. And to start off with, of course, we begin with the US 30, which interestingly enough, kind of as we've ended off 2023, we have seen price kind of come to its heights and begin to range around. We did see that extraordinary rally as we did kind of enter the final months of 2023. And this was driven, of course, by the more dovish rhetoric that we did hear from the Fed. The more dovish rhetoric from the Fed, which kind of drove investors to expect those lower borrowing costs for many US companies. And this benefited the companies, of course, seeing their stock prices rise. But ultimately, as we have entered this new year, whether that be as a result of investors kind of selling off to end off the year or the holiday period, but ultimately we have seen the kind of price volatility of the US 30 and other US indices slow down dramatically, and we're even starting to form a range, which is the kind of topic of discussion today, as we do know that a double top was formed a day or two ago around this area, as I have highlighted here. So as we ended off last week, we did come to those recent highs where we did create a double top, and prices moved away from that in a bearish fashion and has now reached the kind of bottom of the range that's been formed recently, it does seem, and is now reacting in a bullish manner from that liquidity zone. So what will be interesting to see though is whether, because now we're at this top of this rally, whether this will now be a period of distribution and further accumulation of US indices, where prices kind of range between these two key levels. I would say the key levels to note are the $38,000 level. The $37,800 level, as well as the kind of $37,225 level. So those are the two key levels of liquidity that it does seem price is going to be ranging in between. That's not a given, of course, with price expected to also possibly fall further to the downside, depending on data that we will receive this week. And today we are receiving some very interesting data in relation to FX pairs. So that's a nice transition into the dollar, of course, which, after the comments that we have heard today from Christopher Waller, it does seem that this has presented a more hawkish picture, actually, for investors in relation to the dollar. Of course, we did hear Waller kind of talk about how he had an interest in kind of taking taking the Fed's time to kind of cut rates and make sure that rates were cut, after a good amount of data had been analysed and seen, and that there was no rush to start cutting rates. And this seems to have presented a more hawkish picture where rates could stay higher for longer, and as a result the dollar has finally pushed to the upside. Of course, for the past few days and even going into last week, we've been talking about how the dollar's been ranging around, not moving much since the start of the new year, but ultimately we have now seen that push to the upside, breaking above that key liquidity zone. So it'll be interesting to see which levels now the dollar will react to. To move on nicely, we do have Euro USD, which, mirroring the dollar, did sell off today from that liquidity zone that it had been sitting on for quite some time. Price hasn't yet reacted to any key zones that we've noted before, but ultimately it'll be interesting to see where Euro USD ends up after this sell-off. We could be experiencing kind of a long-term retracement, unlikely but always possible, and we're currently sitting around that 61.80, slightly broken below, so it'll be interesting to see how that might work out. Keep your eyes on that. Next to talk about is pound yen, which is an interesting position because on the short term it's been making some interesting moves after breaking out of this key range which price was moving around in. Of course, price had moved to the top of this range and had kind of waited around, accumulated, and broke through finally out of that resistance liquidity zone, and has kind of come back and retested that zone, tapping that 50% Fibonacci level. We did then expect some bullish momentum to the upside, which we have now seen, but ultimately we haven't yet broken those very recent highs made on the 11th of Thursday, the 11th, of January last week. So it will be interesting to see whether we are able to break those levels and then continue to move higher. So keep your eyes on pound yen. We would be looking at price moving to that Fibonacci extension level, somewhere up around that 187 level. Next to talk about though is Bitcoin, which has now kind of seen a bit of a bullish reaction from this liquidity zone that we did highlight. Of course, this is all following the more bullish kind of message provided by the SEC, which did approve of a Bitcoin ETF, but this had already been priced in, and therefore we did see a sell-off actually following it, and price has come down and tapped that key liquidity zone, which price is now moving away from. So keep your eyes on Bitcoin. Next to talk about though is gold, which obviously mirroring the dollar, a bit like Euro USD, did sell off yesterday, after kind of pushing to highs made as a result of world tensions in Yemen and in other areas around the world, such as Taiwan. We did see that kind of push to the upside as we did end off last week and begin this week, but ultimately as a result of the Fed official Christopher Waller kind of having a more hawkish message about the Fed's actions, we have now seen a sell-off from that area as people do price in rates staying higher for longer. So keep your eyes on gold. We may be coming into contact with a Fibonacci level, coming into contact with that 78.60, so keep your eyes on the charts. Last asset to talk about though is oil, where there isn't too much to say. Price has kind of just been bouncing off these liquidity zones, not finding bullish momentum to the upside or downside, but we're still seeing kind of that volatility. So keep your eyes on oil. I think kind of world tensions will be greatly playing into the way price continues to move. So keep your eyes on that. That's all to talk about on the charts though. Finally, to talk about, of course, is the economic calendar, where we are getting quite a bit of data to date. So there's lots to listen out for. Now, firstly, we will be getting Chinese GDP growth rate figure and industrial production figure. Along with that, we're getting the Chinese retail sales data and unemployment rate figure. Finally, we'll be getting British inflation rate figure and Eurozone inflation rate figure. So lots of key European inflation figures to listen out for. As well as that, we're getting the US retail sales data report, along with numerous Fed officials which will be speaking today. So very important to listen out for those Fed officials speaking, as we have already spoken about Christopher Waller's message to the market yesterday. As well as that, we will be getting US industrial production figures along with US business inventories figure. And finally, we'll be having the ECB President Lagarde speaking as well. So lots to listen out for and lots to look out for. We've covered lots in the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. See you later. Bye.